Good morning, team. Happy February 4th. It's the Members Weekend video. So I'm gonna, do the market analysis like I always do, and then I'm gonna go over, I guess some positions that I have, some thought process on what I've been posting this week and this last few days, and analyze the deck trade. Um, and then what I have right now. Okay, so S&P. Basically, what I mentioned, I think a couple weeks ago, kind of almost worked out. It actually did. I mean, we had the cup here. Yeah. We had the cup here. We got the little handle, right? And we took off. That's kind of what I was mentioning. That we had this channel here. Sorry about the kind of looks kind of messy, but I have all my the different levels that I want to keep track of. So we had this channel here, right? And I mentioned like we want to stay up, we want to stay in this upper echelon of the channel and take off rather than go all the way back down to over here. And that's kind of what we did. We got to right there, right there. See? So this it kind of came, which is the handle. I told you we needed to form the handle from this cup, and then so we did. And then we got the resistance, like I mentioned, at this level. We got it rejected. We got back to it again, and then we hung around there for a little bit. If you notice, we hung around this level right here for a little bit, and then once we took off, we took off a little bit and had this prior. Remember this prior high here. What did we get to? The prior high right there. I had the line. And then we got rejected. We came back down to where? To retest. It's just textbook. And then we took off. Once we cleared it, then we were able to take off. And then where do we get to, guys? Right to the 121, 127.2 extension. That's exactly where we got to. This is all pre-drawn from like back in, here. Because I went from here to this low. So from this low here, all this occurred, and then we got to this point and we got rejected, and we got rejected really, really, really bad on Friday. This is a bad looking candle, a really bad looking candle. You want a hammer candle. You want a candle that ends up, like that. You don't want a candle that ends up like that, like this one, because that means this is the high, this is the low, the price got rejected, and it ended up at the low. There's indecision here because it basically opened and closed right at the same level. It went all the way up, it got rejected, and it came back down again. So this is the level, the 4192, the 4200 range. I mentioned that 4130 was a level that we need to hold on the S&P, and that was on the I was looking at that at the hourly. I think at the 30-minute, the hourly, right? 41 right here. That 21. See the 21 is kind of like right there, and we kind of held it just above it at 41.36. And the next level is right here, 41.20, 41.14, and then all the way down here at the 4100 level. And then obviously we have up here, if you notice, we had this downtrend line here, where we fired, a one bar screed, which doesn't really like count, but then we had this momentum pickup, and if you notice, right there, that bar gave you the first indication that the momentum was slowing down. We had a little hiccup, and then boom, boom, and then boom, momentum started going down. So. And then we have all these like the breakout is kind of like on the negative side, where here it's building up momentum on the green side, going from negative to positive, and then boom, we take off. So these things kind of give you a little heat warning, to kind of like start, getting out of the way. Now, from here we could definitely go higher, but most likely we're gonna probably hang around for a little bit. Let me look at the hourly. Let me at the 30-minute. See, the 30 minutes kind of looking a little bit worse. So it means the 30 minutes, obviously, a 30 minute is the head of that 1 hour. So the 30 minutes, it's pointing at one way, the hour will follow. So if we go back to the hour, the hourly chart, it's looking at the momentum. The momentum is it's kind of going down, right? And we're going down here now. If you go back, if you go to the 30 minute, the 30 minute is kind of giving you even a little more of a warning that hey, we're going negative. I mean, we are already negative. So this momentum, took off right around, I would say like 2 p.m. We started going negative. 2 p.m. here is the last bar. Kind of went sideways for a little bit. Now we're getting some red bars. Little yellow means it's kind of like slowing down. The downshift is slowing down, but I'm getting momentum bars. The red. The bars are red. So that means they're negative bars. They're below zero, and we have we got a little 2 bar squeeze here on the early indicator, the pro, and then we fired. It actually fired the red. Sorry, it didn't fire. Firing is green. We went from the black to the red, and then the red fired, and then it goes to black, and then once the black fires, then it goes to green. The black is kind of the last line in the sand. So once this fires, it's looking like it's going to go down. So based on this, on the half an hour, it's looking like it's going to go down. So if we fire down, that means the hour is going to go down. That means we might retest this 41.15 level, another 30-40 points on the S&P would not be unlikely. On the downside, the 21, the 8 cross below the 21. Again, this is the 30-minute chart, okay? So this is like the 8 period, 21 period, and so forth, and the daily. But I like to look at earlier chart because obviously, as the 5 minutes goes to 15 minutes, as the 15 minutes goes to 30. As the 30 goes the hourly, as the hourly goes to 2 hours, the 2 hour, the 4, and so on to the daily and the weekly. So obviously, if I'm looking at something in the daily, I want to see what the 30 minute and the hour are doing because this gives me a heads up that hey, if the half an hour is firing short, I mean we're going down in half an hour. So that means the daily obviously is going to go down. How far? Well, then you look at levels. Like that 41.15 level looks like a level that might hold a little bit, which is back here again. This level right here, that 4100, 41.15 might be something that we might test and then come back, which will coincide with the 8. This is not back to the daily, so which will coincide with the 8-day exponential. We might hit it and then hang around for a little bit before we take off again. Again, the daily has gone a long way in firing. If you notice, we had a squeeze. This is the pro, so we had a squeeze on the pro. Here's the squeeze right here, and then what did we do? We took off. You guys didn't get this because if you have the standard, you didn't see that. You only get the red dots. I get the black dots and the yellow. So once we fired, this is like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 days already after it fired. Off of black, my average is 5. So we're a little bit extended in the firing of the squeeze. So it makes sense that we start kind of going back. It doesn't mean we're going to go back down all the way over here, but as far as we're going to stop going up, we're going to reconsolidate here a little bit and hit these prior levels here before we take off again. So I kind of position myself accordingly for this little toppy action here. And as we move throughout the day, I was taking profits. If you go back to the 30-minute, if you notice here, when we were hitting these levels here, and I saw this bar. Let me go back to it. Sorry about that. Let me go to the hourly. Once we hit this high here, we hit 41.95. Right around there, and this bar is a very negative bar. Okay, we took off. We went down again. I started selling up here, and then where was my stop? My stop was for 41.96, basically. And then the bottom part here, I was looking somewhere around here, the 4.1, 4.4, 399 range, and I was selling, I was selling puts here once we were going down. So as long as we don't get down here, I want to get past, 4,200 basically, which is 420 on the XSP. We're good. Which is the same thing, XSP. I got my trend lines here. I got my orders here. Again, going down here. Same thing. It's the same thing, just a micro. Instead of just take a zero off. 41.92.50. This is 419.25. Same thing. You guys get it. So same thing. Back in the hourly. Again, this is what I'm looking at. I'm looking for, well, again, Mondays normally follows Friday. So Friday we had a pretty big down day. We might have another down day, to the same level on Monday, maybe just a little bit of a down day. I am not getting, let me look at the other settings here. I am not getting extremes. So let me see here. Where is it? Here we go. I am not getting extremes. 30-minute. Here we go. See? The extremes were up here. Let me get it here. XSP. See? We hit the 3 ATR. The first 3 ATR we hit was back here at 412. And we went as high as 419. So it was a 7-point move, even on top of the 3 ATR. So we have to always keep that in mind. Just because it hits it doesn't mean it's going to come back down again. You can continue and cause you some pain if you get short. Let's say you take this first bar here at 412, and let's say you sell, up here, the 415. Oh shoot, I'm in deep doo-doo here because it's way above my strikes. But then what does it do? It comes back down again. Now it's like 413, so that 415 was safe. Just to give you an example. So that's kind of what I look at here. See here, you had that extreme 3 ATR right here about, let's say, 408, and immediately came back down to 406. Guys, 2 points, it's like 45 cents, 50 cents on a vertical short call. If you have, 30 contracts, 3,000 shares, that's $1,200. The same thing when we get to the extremes here. Once you hit the extremes here, say 402, and I'm selling here the 399s to 400, and it goes up here to 408. This right here, a couple thousand. That's kind of how that works. Again, they're pennies, but when you do it, 1,000 times in a month, you make a living. So again, we got the extremes here, and then once I started seeing the light blue, which is the momentum, go to darker blue, that means we're slowing down. Haha, I'm going to stop pounding here now. The momentum is slowing. We stop going up. We can go sideways. Going sideways is perfect for me because I'm selling premium and we stop going up. That means this is decaying. So the value of this option is decaying in price. So that means it's going lower and lower and lower. Clean this up here. So, and the same thing here. We are right now at this is the medium. This is the 21, let's say. This is a 1 ATR, 2 ATR, 3 ATR to the top side, 1 ATR, 2 ATR, 3 ATR to the downside. So we're touching 2. We are below previous levels here where we hit it here. We came back down to it. We touched it here. We came back down here. We touched it here. We went up. And now it becomes resistance. If you notice, this is a level of interest. This right here is a level of interest. This is about that 414 and a half, 415 level. So we are below it, see, and we hit our head. If you notice here, we're going down with it. This is the 2 ATR. Hit our head, hit our head, hit our head. These things matter. These levels are meaningful. So you have to heed their warnings. Okay. So where are we right now? On the 30-minute, we went from red to now we're slowing down the process of going down, which is fine. A nice little mini little hammer candle here. We had a nice little mini hammer candle here. We still went down. So again, I will not start selling more. I do have short puts right now. I have been selling short puts way down here. I have like 398s, 397, somewhere, these levels right here. So, I'm going off this prior lows, but this level, these right here should hold support. Or at least it's gonna take a while to get here. So my options will expire worthless, and then I can make some money there. The same thing on the top side. I'm selling the 425s and the 430s once we start getting up again. But as of right now, we're not at extreme levels. We're just like one ATR, between 1 and 2 ATR. That's not extreme. We can go in either direction. We kind of just going sideways. Which again, going sideways for me is perfect. Why? Because time passes and the options lose their value. Let me go a little higher time frame here. See, in the hourly, we're just at the middle. At the hourly, we're just at the middle. So we're kind of like in no man's land. We can go in any direction. So that's why iron condors kind of work. Let me look at the daily. The daily, see this level here. It mattered, 400 level. The daily we did hit it. See if you notice, we hit it right here. We hit 3 ATR right here in the daily. Sorry. Right, and then we came back down right at the 2. So this looks to me like a little exhaustion run. And then we kind of come back down to that, maybe like that 410 level, and then these things will catch up a little bit. Normally on the daily, if you notice, you don't really get a 3 ATR move. Let me see. The last time we got a 3 ATR move was back here when we rode this back in August. If you notice, we rode this all the way up from, like I said, when we hit that first 3 ATR 414. And we went to 432. That's a 200 point move on the S&P on this, and then once we hit that, we went from 432 all the way back down to 360. In September. So these levels of extreme. Again, we could write this the wall of worry and then go all the way down. Like even here, when we hit that first 3 ATR at 400. We went to like 390 and we went back to the middle. See, this is the medium. We hit the medium. Okay, we're done here. And we shut down again. So you can make money in these things, and then you can get caught in this as well. Let's say you're here. Well, if you sell here and then you cover here, but let's say this first one you sell here, and then you got a little bit more, so you kind of try to go as low as possible. Even here, when it goes sideways for a few days. If you sold somewhere, let's say it hits right here at 366, and you sell 360, and it goes to 371, that 360 you can make money on. That's what I mean. Even here, you sell at 355 or 350, boom, you make money there. Then here, you sell 390, boom, you make money. Here, you sell the 345 to 340, boom, you make money. That kind of thing. So that's kind of what I do with this. I look at the levels, I look at the probabilities, and you make money on that. Even here, let's say here, the 413 level, when it was back here, let's say I hit that first 3 ATR. What I do is I wait to see the first darker blue. That means the momentum is slowing down. See, this can still continue, right? So once I see this blue bar, and this is the level, okay, we're going down. So what do I do here? This is the 419. I'm probably selling the 430 or 428, 427 around there, right? I'm selling this day right here. I'm selling here, and what happens? We go higher the next day, so I'm in trouble, and then we hang around for a little bit. Still hasn't been a hit, and then we go down to like 413. Just this little movement from like 420 to 413, my 430, I make money. Simple as that. Now, if I'm still in trouble, I let it go down, I let it go up a little bit, I roll up here, and then once we get this flush, I make money here. Even here, when we get to 3 ATR, let's say I would have jumped the gun. I would have sold the very first yellow bar here, 395. I probably would have sold a 85 to 380 around there. Yeah, I'm a little bit of a drawdown when it hits back here, but it never hits it. And then the next few days, just gotta wait a day or two. It goes up, I make money because this is worthless. That's kind of how you run this. Even here, if I would have done it this day right here, this is the 365. Let's say I would have sold the 355, the 360. Okay, I'm a little bit of a drawdown here. Oh, I'm sweating bullets. Boom, I wait like 1, 2, 3, 4. I wait a week basically, and then you get the bump. I keep rolling. Boom, you close it out, you make money. That's kind of how I trade the XSP, guys. It's just been ebb and flow with the market. Just go ebb and flow with the market. Whenever I get to extremes, I sell here, wait for a little bounce, I cover, and then if we go to an extreme, I sell here. If we go here and then I see it go down again, then I might sell these levels here. That's kind of how I run this. I'm kind of digressing a little bit on this, but I wanted to kind of show you what I do with this. Let me go here. Sorry. Let me go back here. Here we go. The regular chart. So okay, that's that. Now, just real quick, the deck trade. This is kind of, let me see here. Here's what I was looking at on the deck trade. Okay, right here, we got a pullback. This is deck. We got a pullback on deck right closer to the support levels. These blue dots are support levels. If you notice, once we got a buy signal, which is that that first blue bar, these arrows are the weekly. So we have a buy signal on the weekly. So this is a multiple time frame chart that it combines 2 time frames into one. So I have a weekly and the daily. The arrows are the weekly and the dots are the daily. And then this chart, I have it coinciding. This is the 130 minute, which is basically a 2-hour chart, but there aren't exactly 2 hour divided into the day. So each bar for the day is 130 minutes because of the way the market is set, the market hours are set up. So this is the daily, and this is the daily and the 130 minute. So the daily, it's the blue dots, and then the 130 is the 130 is the dots, and then the bars is going to tell me the buy signal now. So the 130 we drop down, which is kind of like these bars right here, but then we close above this support right here. So I have this right here. That's why I was telling you guys that 404 is kind of like the stop out. So these held here. This held here until it didn't, and once it didn't, you get stopped out. So if you're a buyer here, you take some profits here, it goes back down, you get stopped out, and then you get back up again here, you get the first key, you buy here, and then you basically write this. So this would have been bought, let's say at 395. It went as high as 430. Obviously, you take profits along the way, but I'm kind of trading this off a buy signal on a pullback to support. And I'm doing it with options because it gives me a little bit more leverage. So what I did was, when you buy, let me bring this in. When you buy, see, this is my XSPs that I have. If you notice, they are, I got them scattered, throughout the week. I closed out all the calls. Like I told you, I closed out all the calls like that. I took profits, so all I have is puts. But I only have about a 591 delta. So again, I'm within that 1500 delta safe zone, and I'm only 259 on my longs. So I have like an 800 delta overall. So I am leaning towards the positive side. So if we go lower, yeah, these guys are going to be a little bit of in trouble, but no big deal. I mean, I have the 401, the 399, 399, 399, 394, 394, 394, 395, 397, and we are at 413. So we basically have to drop 111 points on the S&P on Monday for this one to be in trouble. This is Monday's expiration. So if we do that, then we need to drop 120 points by Tuesday to hit this 399, and then this 390. Clean this up. The 399 as well here for next week on Wednesday or Thursday. So, but again, if we drop 110 points, I guarantee you we're gonna have a little bounce. At least the very next day. So that little bounce is gonna save me because this will expire at that point and so forth. And then I have 394 and so forth. So I just need a little bounce up, and then I can close these guys out, and then I start selling on top. And then how that works is right here. XMP. This is where I have positions. So basically, let's say for the ninth, I don't have any. See here, let me see the 7th here. That's what I have. Okay? I'm short the 401, and I'm covered at the 391. And the 401 is basically a 4 delta. What that means is there's a 96% chance that this 401 is not going to get touched. I like those odds. I don't know about you, but I like those odds. The market is telling me, it's giving me those odds. The market maker is making those odds. That means that they're not going to lose money. On February 10th, I have these contracts. At 399, I have a 7 delta, right? That means that there's a probability of 93% that 399 is not going to get touched on February 10th. That's what that means if you know how to read this, okay? So, and the reason why I sell here and I cover here is to not be naked, because if I don't buy here, I'm exposed to a black swan event that it just goes down like 300 points and I'm screwed. So I'm capping myself to 10 points, which is 1,000 points on the S&P. Sorry, not 1,000, 100. So from 10 points here is 100, and so I'm limiting myself to 100-point loss, which is it's still pretty big. But again, I could roll, but at least I'm limiting myself to not be like 100%, just totally exposed. So those are the probability. That's how that probability scenario works. So let's say what I would do here on 9 days away, February. I would probably do that, but let's say on February 9th, I don't have anything that day. So this, just so you can know how to read this, guys. This right here tells me that the market is expecting a 6 or 7 point move. The market is expecting a 7-point move on the XSP, which is basically a 68-point move on the S&P. So from here to February 9th, there's an expectation of a 68-point move up or down, right? So that tells me something. So now I'm looking for at least 7 points or higher difference. So this right here is a 413. So 7 points, it's about 404. 406 around there, 405. I like to go a little bit long, a little bit more than that. I like to go at least inside the delta 10. So I want to give myself at least a 90% chance. So I scroll down and I start looking at delta here. Okay, when I get to 10. Again, this is negative because this is the puts. This is positive delta because it's the call side. Okay, so just again, example 414, the 414 level. The market is expecting a 50-50 chance that 414 is going to get hit. I mean, we're obviously right there. I mean, it's pretty damn close. So I will sell somewhere here on the 10, which is 424. There's a 90% chance that that the market will not touch 424 by February 9th. That's what that means. So if we go up, let's say to like 416, 417, this becomes greater. So now I could sell further away for the same value. So here's what I would do here. Let's say we go. Let's say we continue to go down. Let's say we go to 410. That we test that 410 level, which is the 4100. So I'm looking at a 10 delta. A 10 delta is 402. That means I'm giving myself 11 points. The market is expecting 7. I'm giving myself 11. I probably still would not do that. I still want to go inside those logical numbers. So I would probably sell at 399. The 399, again, I wouldn't do it right here, right? I mean, let's say the market opens, I wouldn't do it then. I would wait for this to go down. I'll wait for the market to go down 10, 15, 20 points. And then this 399 probably becomes 7 or 8, but then this premium probably becomes like 40 cents. Okay? So let's do it that way. So let's say it gets to like 38, 47, something like that. So what I will do is you hit control, and I will click here. I will click the bid, okay, and then with the control, I'm still hitting the control. I will go to 392. Give me the 10 points. I'm buying. So I'm selling the 402 and I'm buying the 392. That means this caps me at those 10 points. So this is the vertical. And I'm getting 36-cent credit, which that gives me on 5. Well, I'm not doing 5. I never do 5. Minimum I do is 10. So this gives me $352. Okay, so 352 is what I would get in my account, and then what I would normally do is I would buy it back at like 19 cents, 9 cents, and pick up 55 to 75% of that profit, and then do that 50 times throughout the week, and then you average between 1,000 to 2 grand a week doing that. That's kind of how I do the XSP. Now the deck. What I did on deck is, here, this is the one I gave you guys, right? So I bought the April 410, and I sold the 430. Okay, so I'm a little down. I'm down $65. It's no big deal. I went ahead and also bought. I didn't give you guys this one because it's it's a lot more money. I actually bought just a spread of the 400 to 450 straight up at 23.50. That's up like $10. No big deal. Again, what I'm doing with this is, if that goes down, I'm making money here. This 560, it's 100% mine. Okay, so yeah, this 2980 will go down as well, but this will go down faster. So my rate of loss is decreased. I'm kind of giving myself a built-in hedge, and then I automatically have a working order to roll here. I'm going to buy back that 440 March 17. I'm going to buy back that 430. This 430 right here. I'm going to buy it back. I'm going to sell the March 440, and I want to pick up $550 more of credit. Right now it's at 330. So obviously it's not being executed, but I have an order there. So if that goes up, then this will be executed. Then I will actually have an extra 550 lowered cost basis on that. Okay. Again, I'm trying to buy these back. You see, I'm buying back at what I was telling you before. I'm buying back this XSP one that I have, 9 cents, 9 cents, 9 cents. This and here are 14 cents. So 65. So I just put this one on. The Fed 15, 397. So that's kind of how I work these things out. If you notice right here. See, these are the ones that I have here. I'm trying to close them out. Once if you have a little pop, then these will automatically get closed out. So I'm basically flat on these positions. Again, I have a small delta on this. Crocs, like I told you, I have it covered. I have the 120. I have like a 112.70 cost, and I have a 114, 113.89 cost here. So I basically want to get these guys taken away from me at 125, these 200, and then I have another 300 at 120 because I have here. I sold this 120 here for 710, so I picked up an extra $700, and I was just buying. I have 118 here, 118 here, and 116 here, so 120, 121. So I'm profitable on all this, so I have a cushion, so I'm not worried about Crocs. I'm just gonna hopefully in the next 13 days, Crocs will be above 120, or at least above 125. So all these guys can be sold at 125 and then 120. And then I have, here it'll be a $1,600. Sorry, I have a cost of Jesus. I have a cost here of 112, and I have a cost here of 114. So this will be about a $2,000 gain. This will probably be about a $1,600 gain. So it's about three to $4,000 in about I have 2 more weeks to kind of hold this up. I'm already up about 1,500 on this for the year. So Crocs is working fine. Now these other ones that I have here, I can give you guys love. It's just a small little trade, no big deal. I'm selling the 34 and a half put. I'm saying that this is not going to go down to 34 and a half. Small little trade. Sold it for 27 cents. Picked up a couple $100. I'm just gonna let it ride out. Then the other one is UMP. Same thing. I sold this short vertical. I'm basically saying, okay, UMP is not gonna get to 202. As long as it stays above 202, which is right now at 210, even when it was down a lot on Friday. As long as it doesn't get there, I'll pick up $170 around there on this. Just kind of let it ride for 13 days. Not a big deal. It's about 10% gain. I picked up about 170 with a $1,000 risk profile. It's not a big deal. And then the other one that I have here, I just picked up some XLE. So I saw it kind of hit a key level. Again, I bought it at 86.16. I have an 85, I think 68 stop. So it's like, I'm down $38, no big deal. Now the one that's kind of like probably going to be a max loss is going to be the ABNB, which again, max loss is going to be like $300. I mean, it's 278 loss on this right now. It's not a big deal. Just kept on buying, my original 55 cents. Then I kept on buying at 10 cents. It's at 7 cents right now. I still have 6 days. No big deal. Worst case scenario, I lose another $70. I have 10, and it still has $70. If this goes to 0, I'm gonna lose $70 more. So this will be like $350, $360 loss that I'm gonna take on this. So I'm risking $360 to make a couple thousand. That's it. It's like just a trade that I thought it would work out. The ABNB will get down to 100. It hasn't so far. You never know. I'm letting it sit there. That's what I got, guys. Basically just focusing on the SXP because of the way the market is. The other thing I was telling you guys, look at the VIX. The VIX was actually down 40 cents while the market was down, 43 in the S&P, almost 200 points on the NASDAQ. The VIX was down. The put to call ratio and the regular put to call ratio, they are 0.80. Anything above 110 is an extreme. That means that the market has a potential to go down. I'm sorry. It's the opposite. Anything over 110, 120, the market is going to have a probability to have a rally. That means there's a lot more puts out there than normal. So there's a lot more fear. So when it's an extreme, you go the other way. And then when this is at 0.6, anything below like 0.8 really, around there. 0.6 is an extreme, 0.5, anything below 0.9, 0.8 around there, that means there isn't that much fear. There aren't that many put buying out there. That means that the market, has a probability to continue to go down. So this kind of plays out with maybe Monday, we have another down day. Okay? And then, so I'll take this into consideration in part of my narrative, right? Then I look at here, and I look at these extremes levels that we're hitting our head here. We have a nice little stack here. and then see how we're kind of like we're starting the first bar of little down. We have one here and we continue to go up, but this is a little bit extended. We might have a little, down to 410 level, which is, 4100 on the S&P. That's kind of what I'm looking at. Okay. Again, this moves about, 6.2 points in a day. So in a day, it could move 6 points up or down, which is about 60 points on the S&P. You can make good money on that, guys. If you time it with the other indicators, with the other extremes, like I was showing you here. If you time that, if you look at those kind of levels with you go, let's say, to a 30-minute or an hourly, and then you see an extreme level here, you see the put to call ratio here, low. It kind of gives you sign, okay, this is a high probability. I'm getting signals here that we're kind of toppy. You start selling the heck out of premium up here. You get just one little move, boom, make good money up here. That's kind of how I've been trading this. Okay, I moved the wrong one, so this is, I'll put this over here. So this is the one that goes over here. Okay. So that's kind of what I'm looking at, guys. Also, let me see here. So how are we looking? How are we looking here on the SPY, which is basically the Nasdaq. I mean the S&P. So yeah, we had a buy signal that these levels held. See, these little dots here held, and then we've been going up ever since. So basically, yeah, this touched me right here. See that 401 level, that 402. 402 at 0.81 on the SPY. It's kind of like what, let me see here if I can get this SPX. Sorry. Yeah, it's not letting me read it. So let me see. It's no. Let me get the SPY. Same thing as the S&P. Okay, same thing. This is basically like for the 41.23 level I was talking about. So we on the SPY, that 402 level, that 405 is kind of going to give you a little bit of a level of resistance here. I mean support. So that's what I was telling you about the 4100. Let me see here, the SPY, this one on the 130. Yeah, we got buy signals. We got buy signal on the weekly. We got buy signal on the daily, which is right here on the 130. We have a sell signal. So here 418 is kind of a top, which is that 419 level. So it's kind of all coincides. So we have all these levels, all these different indications that we're not gonna most likely not see a big update if we do an update at all on Monday. We might see a continuation, and then we have a turnaround Tuesday scenario. Okay, I think I've gotten long enough in this video. I've explained kind of like a little bit more in depth of XSP, what I do, what I'm looking at. If you guys want to make some money doing that, I kind of gave you a little insight there. The reason the deck trade, kind of like thought process on that. How we'll adjust it if it goes up because it goes down. I'm gonna just keep rolling that lower time frame option to keep generating premium to reduce my cost basis. And this is how I see the market. Basically, I don't have any other positions that I'm looking at as far as going long because I don't think we're gonna be going up anytime soon. At least for the next day or two, maybe on Tuesday we had a turnaround Tuesday little rally. We'll see. But these are the levels that we need to clear. We need to clear these levels up here before. We need to clear this 420 level. 4200 around there, 4190. before we see higher prices, and then we'll most likely go back and retest. So I'm gonna be in the assumption that we're going to be retesting 4100, which is basically 30 points down on the S&P, which is not a big deal. We might touch it during the day on Monday and then get a bounce back again. We'll see. All right, guys. I hope you're good. Hope you're doing good. I hope you made really, really good money this week. And if you have any questions on any of these trading thoughts, patterns, positions, process, please ask me. I'm here to help.